Hey guys, today we're going to be talking about Occidental Petroleum. Now, if you haven't heard of it already, it's a major oil and gas company based in the United States. I'll give you a recent background of what's been happening with Occidental, then we'll take a look at its balance sheet, followed by some charts, and then I'll give you 3 reasons why I bought Occidental and why I think it's going to go higher. Alright, let's dive straight into it. Occidental Petroleum is an explorer, producer, refiner and transporter of oil and gas. It operates primarily in the US, but has assets globally, such as the Middle East, Africa and Latin America. In 2019, Occidental took on a whole heap of debt in order to acquire rival Undervalued Petroleum for a whopping $57 billion. Occidental itself was only worth $50 billion at the time. And then came COVID. They say a picture paints 1,000 words, so instead of carrying on, I'll show you the price chart of Oxy from 2019 to now. As you can see here, it was destroyed in March 2020, and it got destroyed again between July and October a couple of months later. But since then, the price has gradually recovered and appears to be in a trading range between $22 and $34. We'll leave the chart for now and then we'll come back to it later because I want to talk about Oxy's balance sheet. One thing that really stands out to me is the huge amount of debt that Oxy carries. Most of it came from the Anadarko acquisition in 2019 and it's been struggling to pay it off since. Right now the debt is standing at over $35 billion. This doesn't even include the $10 billion it borrowed from Warren Buffett to finance the Anadarko Petroleum purchase. When you compare Oxy's debt level to other similarly sized oil and gas companies, it's pretty high. This means that Oxy is more leveraged to the price of oil than its peers. This is a double-edged sword because it moved against Oxy last year when the demand for crude oil and consequently the price plummeted. But the tables have now turned and Oxy, like many other oil and gas companies, is enjoying the fruits of the economy reopening and the greater demand it puts on crude oil. All of this points to higher oil and gas prices, which means higher profit margins, which means more cash flow, which in turn means more debt paid off. Furthermore, Oxy is selling off non-core assets in order to raise even more cash. Just a couple days ago, it announced the sale of its Ghana oil assets for $750 million. Its CEO has also said that year to date, Occidental has paid off $4.5 billion in debt. This is set to continue with future divestments. Now, just a quick word on revenue. We see here that quarterly revenues fell off a cliff in 2020, but is recovering fairly well since. And hey, look at that, it's even made positive earnings in the June quarter. That's enough on fundamentals, let's go back to the price chart. As I said before, Oxy has been trading within a $10 range between $22 and $32. It looks like it's trying to break out, but it's all dependent on the crude oil price this week. If crude oil falls, we can expect Oxy to form a handle to accompany the cup it has formed over the past few months. If oil continues to rally, we can expect Oxy to follow and break out to new highs, possibly testing the $40 mark. Regardless of what happens to the crude oil price this week, I'm bullish on Oxy's chart, mainly because its peers have already broken out to fresh new highs. This is the chart of Diamondback Energy, another oil and gas company that I own. This is a chart of Marathon Oil, also another oil and gas company that I own. And just to drive the point home, here is the chart of Sasol. And yes, I also own this one. We see here that pretty much every stock except for Oxy has broken out to fresh new highs. So unless something terrible happens to the crude oil market, I expect Oxy to catch up with its friends and make new highs. Anyway, I bought Oxy at just over $26 and was fortunate enough to capture most of the current rally. I bought in just under 2 months ago and I'm already up over 30% on the position. So long as the price of crude oil doesn't crash, I think there's still a lot more upside in this stock to be had. Now I'll give you 3 reasons why I think Occidental and many other oil and gas stocks are likely to go higher. The first is the price of oil is probably going to keep going higher. This is purely a supply and demand situation. There's large pent-up demand from economies reopening and people are driving more cars than ever due to a stubborn reluctance to return to public transport. Remember, even though EV sales are growing rapidly, they are still less than 5% of the total car market. It's even less in developing countries like India and Brazil. There's also the added demand from aviation travel, which is recovering strongly going into the Christmas holiday season. On the supply side, the oil market has undergone years of underinvestment. The chart here shows the amount of money spent on oil and gas exploration and production over the past few years, and also has estimates for the next few years. It's clear that oil and gas companies have been spending less and less money on exploration and increasing the supply of oil in order to increase cash returns to shareholders in the form of dividends and share buybacks, and also paying down debt. So these supply constraints that we're seeing now come to fruition in the form of higher oil prices have been years in the making and will probably take years to solve. So my second reason for why I think Occidental is going to go higher is that Occidental is undervalued. Before Occidental and Anadarko merged, their combined market cap was over $100 billion. As of today, the market cap of the merged entity is just above $30 billion. And that's a lot of value destruction. Sure, Occidental has sold off a lot of non-core assets since the merger, but not $70 billion worth of it. With the economy back to pre-COVID highs and the price of crude oil way above pre-COVID highs, I think the market is putting too low a valuation on Occidental's prospects. Sure, it actually had a significant chance of going bankrupt last year, but it pulled through, and it's likely that it'll continue to operate as a solvent but encumbered oil and gas entity. Once Occidental begins to chip away its debt pile at a greater pace, I think the market will give it a higher PE multiple. Now on to my third and final reason why I like Occidental as a buy and why I think it's going to go higher. Occidental has a lot of profitable and interesting subsidiary companies. One of these is Oxy Low Carbon Ventures, which focuses on technologies that reduce carbon emissions. Now it does this mainly by capturing carbon dioxide from the air and storing it underground. At the moment, this side venture stores 20 million tons of CO2 annually, has 14 carbon dioxide plants, and 2,500 miles of CO2 pipeline. Having a side business like this ticks a lot of ESG boxes, and it could end up being a legitimate profit driver in the years going forward. Occidental's other subsidiaries are a midstream business which deals with the transport and storage of oil and gas, and a chemicals business called OxyChem, which produces industrial materials like PVC pipes, caustic soda, and chlorine. Both of these businesses generate a lot of cash and complement Occidental's main portfolio of oil and gas assets pretty well. So that's my take on Occidental Petroleum. I don't have a price target on this stock, but I am bullish on it for the next couple of months at least. Let me know what you guys think. Are you buying, selling, or holding Occidental Petroleum? And if you haven't already, please click like and subscribe for more content. Thank you.